Hey, what's going on, everyone? What's up, traders? What's up, tycoons? We're going to break down the UNG again. All right, this is the natural gas fund. I gave you guys in the last video, some of the major patterns that we're looking at, our major support levels, major retracement levels to the upside, as well as a bullish divergence on the relative strength index. And we're going to also take a look at the MACD in this video as well and use it to show you guys how you can find possible entry and exit signals by using the MACD. So you're going to learn a lot in this video. But before we jump into the chart and break down the technical analysis, I have a really simple and good presentation I want to show everybody here. There's been a big bull market in energy itself. So what we're looking at right here, this is actually going to be XLE versus SPX. This is energy versus the stock market. All right. And the beginning of all these charts is going to be the end of December 2021 and January 2022. So we can see from January to January, energy has vastly outperformed the stock market. This is XLE versus XLK, energy versus tech. And we're seeing the same pattern, right? Energy much greatly outperforming. Energy versus growth. This is XLE versus SPY-G, the growth sector of the SPY of the S&P, outperforming. This is energy versus the US dollar. Now, we did have some spikes in the US dollar, right, in Dixie this year. The US dollar did show lots of strength, and you saw, it's very demonstrated on this chart. But overall, look at where we started in January and look at where we are now in the new January, in an uptrend, right, in a clear uptrend. We have energy versus bonds. Okay, this is XLE/BND. This is the bond market ETF, total bond market ETF, outperforming. Right, even here, everybody's favorite, energy versus TLT, energy outperforming. So, you have to ask yourself, will this continue? And, do you want to fight the trend, right? Clearly, the trend is energy is outperforming, whether it's the bond market, the stock market, whether it's tech stocks, whether it's growth stocks, whether it's, the US dollar, energy has been outperforming. That trend could continue into 2023. There's no guarantees. I'm not a financial advisor or someone with a crystal ball, but, it's good to spot the trends and remember that the trend is your friend. All right. Now, if we take a look, this is energy versus natural gas. Okay. So natural gas has been performing very, very poorly in this year, in the past year. All right. It's no secret. You guys just saw that chart that we were looking at. It's very bearish. But natural gas overall, if we take a look, it's almost break even, right? So it's pretty much it did have a point where it was outperforming the market in 2022, but after its recent collapse, it's just barely above where, it started off the year at, if we take a look. So we can see here, it's only a very small incline, right? So natural gas in the end has outperformed the stock market, but at a much less degree than, energy itself, right? In the whole energy sector. So, just keep that in mind when you're looking to invest into natural gas, is that, it hasn't been performing as well as other energy sectors, okay? And as well as the energy sector as a whole. Right over here, we're looking at natural gas versus growth. Okay, and we can see the same thing. It is outperforming, but to a much less degree than energy sector as a whole. Right, we can see, it is up a little bit, but it's just not as strong as XLE or just the energy sector as a whole. This is natural gas versus tech, looking very similar. We have natural gas versus bonds. These charts are much less bullish than, the XLE version that we were looking at. Natural gas versus TLT, natural gas versus the US dollar has underperformed, right? It's actually underperformed, compared to some of these other charts. It's at a lower low than where it was in January. So, just keep that in mind as we go forward and go ahead and take a look into the UNG chart, which we're going to do right now. I did mention that it recently made 52-week lows, and the things that make 52-week lows often make new 52-week lows, which is what we did shortly after that video. We created a new 52-week low. Now, we have three major support levels, okay, from the past. We have our major support level here at 1167. We have one here. This is all the way back from May of 2021. We have a major support level at 1031. And we have another major support level from March of 2021 at 904. So what we've done is we've actually broken below and flipped it to resistance, our first major support level, right? If we zoom in here, we can see what we've done is we got a short little bounce, right? But now we're trading below our major support level, and we came up today and tested near it, but we're heading lower. So right now we need to get above 1167 and flip that back to support from resistance, right? You can see we got multiple bounces here of support and we went up higher, but we've come down and we've broken that. All right. So not only is 1167 really important, but this trend line is also going to be very important. All right. We've tested it like 4 or 5 times. And if we take a look, here we go. Here you go. We got 3, 4, 5 bounces right here recently. So we want to see and maintain this trend line. Okay. It is a support trend line, and it is for a much larger bullish pattern, right? If we take a look, we have a trend line on the top as well that we're paying attention to. These two trend lines together are forming a falling wedge, right? Or a descending wedge. It's a bullish pattern where eventually you would look for a breakout to the upside. So, we went over the charts and compared natural gas to a lot of different things, whether it's the stock market, the bond market, the US dollar, and we see that it's underperforming. We can see that it's dropping a lot. The trend may change at some point, right? Sometime in 2023, maybe 2024, maybe 2025. We can't really predict the future, but we can follow the trends, okay? So it's going to be interesting to see, do we end up breaking this level of support, this trend line here, and bring us down to our other two major support levels at 1031 and 904, or do we get some type of bounce, right? We'll go over the bullish divergence now. So we have a low here and we have a lower low here, right? So clearly the stock is in a downtrend. But if you take a look at the relative strength index, we have a low and then a higher low. And in my previous video, I mentioned what you want to see and what you want to look for is even if this thing goes down, which it's done, it's already started to go back down, you want to see it hold this bullish divergence trend line, right? So here we're holding the bullish divergence trend line of support. Now, if we break this level, retest it, and you start to see the RSI collapse and go down, most likely you're going to see the stock as well. You're going to see UNG head back down to that 904 to the 1031 levels. So keep a close eye. But as long as we're holding this level, we still have our bullish divergence there, right? It's still valid, and it still indicates we could get some type of bullish activity in the future. Now, if you're looking to play bullish on it, what can you expect, right? So not only do we know that 1167 is going to be, it was our major support level and it's now resistance, okay? You need to pay attention to the 3 Fibonacci retracement levels. And the reason being is because these are going to help you establish whether something is in a downtrend, uptrend, or a possible reversal, right? So nothing moves in a straight line down, nothing moves in a straight line up. What you get is you get a move down, retracement, and continuation downwards, or you get a move up, retracement, and continuation upwards. Once you break through your retracement levels, that's when you can spot a reversal, either to the upside or to the downside. So let me go ahead and show you guys what I'm talking about. Okay, so if you take a look here, what we have is we have our swing high, right? And we connect it down to our new lows, right? So we have this move down. We're starting a downtrend. We retrace up, get a healthy retracement. It's all healthy as long as it's in these 3 levels, right? 61.8, 50%, and 38.2. We come down, we retrace, we close just below the 61.8, and we continue that downtrend and head down lower, right? We zoom in over here, we move forward into the future, and what do we see? Same thing. We have our new swing high, we have the move down, we retrace up to our 50% retracement level, and then ultimately we continue that downtrend and head lower, right? Now we have a new high. We come down, we retrace, come up to the 61.8, and continue that downtrend. So now what we're doing is we're taking our new high, okay, because we made a high, a lower high, a lower high, a lower high. So we're taking our most recent lower high right here, okay, and connecting it to our most recent lows. And if we do get some type of move up, it's going to be a healthy retracement, right? So you don't have to be completely bearish on this. Things are going to bounce, right? And so you want to know where to be cautious at if you're playing the bounce, right? it's definitely a time to use caution right now because we already broke our major support level. And until we get back above 1167, things are going to be looking bearish. We have two trend lines, all right, on our relative strength index we need to watch out for. And we want to see the relative strength continue upwards in an upwards direction and hold this trend line. And we want to see us continue to bounce off of this trend line here and continue in an upwards direction. If we break this trend line, then obviously, we're going to be heading lower. But for now, the bullish divergence is still valid, and we take a look and, we're still bouncing off of this trend line. So if we do get some upwards movement, you have 1502, 1630, and 1758 are going to be your three major retracement levels. These are the areas where you need to use a lot of caution, right? Particularly making sure you're in some stop losses. Okay. If you're riding the momentum up and you're up at these levels, you don't want to enter a new trade in these levels, right? You don't want to enter a new trade for a breakout and then we come back down and, this was just a healthy retracement. And you don't want to try to short right here, because what happens if we don't get the retracement continuation and we actually come down and break through these levels, right? So this is an area of caution that you don't necessarily want to go long or short at. You want to rather protect your trades if you're already in trades within these levels. Okay. So that's just something to keep in mind. Now, another thing we can look at that I said we're going to look at is going to be the MACD. Okay. So the MACD is very good for spotting potential entries and exits, and most particularly it's effective on the daily chart. Okay. So, what you're going to look for is this red line, the red line trading above and then crossing below the white line right here. That's going to be an exit signal. So you see, we get an exit signal right over here. We get a move to the downside, right? Over here, we get an exit signal. We see the red line crosses below the white line. That happens right around here, and we've had this large move to the downside. Now, it works to the upside as well, and if we take a look at our MACD, not only do we have that bullish divergence building, but it's getting very close to a crossover. So we could see a possible entry based off of the MACD if this red line crosses above the white line, right, and it starts trading above there. Then there's potential we can repeat what we've done in the past. Over here, we got a MACD buy signal when we crossed above, right? That's right over around here. And you see we had a nice move up, but that move got stopped at our 50% retracement line as well as the trend line. So, just use all of these things together to better inform your decisions and really improve your trading, right? At the end of the day, trading is like going to battle. It's like going to war. You need to have the proper weapons at your disposal. You need to know how to use those weapons so that way you can increase your odds of success on the battlefield. Now, if you enjoyed this video, make sure to smash the like button and subscribe to the channel. Really appreciate it. And you might enjoy one of these next two videos as well. So click on one of those.